Every forex trader dreams of catching the top or the bottom of a trend before it flips. But what if you could consistently spot reversal before they happen? In this video, I'm going to break down exactly how to identify potential market turning points before they appear obvious to the crowd. These are the same techniques used by institutional traders and smart money concept traders. Stay tuned to the end for a bonus tip that can save you from countless fakeouts. Before we proceed, if you're yet to subscribe to this channel, I want you to hit the subscribe button, turn on your notification bell so you'll be notified when we post many more amazing videos. First, for you to be able to identify a point at which the market is going to reverse, you have to know what a reversal is. Now we're going to define what a reversal actually is. A reversal happens when price changes direction. That is, an uptrend shifts into a downtrend, or a downtrend shifts into an uptrend, reverses over here and changes into a downtrend, or a downtrend changes into an uptrend. Okay, so that is exactly what a reversal is. But here is the catch: most traders only spot reversals after they happen. Some traders don't know that reversal is about to occur because they don't know the conditions they are to look out for before knowing that a reversal is going to occur. And that is the purpose of this lesson. I want to tell you some factors you are going to put into consideration before knowing a reversal is going to occur. So let's proceed. So the goal is to recognize early warning signs so you enter before the crowd enters. If the price was going up here and you are to enter a trade, most traders might want to wait for this, okay, for this break of structure, okay, before they enter. Okay, but the purpose of this video is to make you know that a reversal is going to occur and you can enter at a very high point where you will not be knocked out by any retracement. Okay, so that is the purpose of this video. So let me break down those signs you have to look out for you to know that a reversal is about to occur. So I'm going to outline the factors you have to look out for you to know that a reversal is about to occur. So one of those signals is, one, price exhaustion. If a trend is about to change from bullish to bearish, okay, price gets exhausted, okay, price gets exhausted. And how do you identify this sign of exhaustion? The sign of exhaustions are the candlesticks start becoming smaller, okay, like here you can see. Let me zoom out. Okay, so if you look closely at this stage, okay, when you look closely, you can see the candlestick bodies here, they are long, okay, they are long. But as the price is getting exhausted, you can see here the candlestick body becomes shorter. Do you understand? So the candlestick body becomes shorter, and this is the first sign you have to look out for. Is showing that the bullish trend is being exhausted. Okay, it shows signs of exhaustion. So the one of the things you have to do is what? To check the size of the candlestick bodies, if they have high momentum or low momentum. Okay, so it often shows a sign that the trend is dying out. Okay, so other things you have to look out for to show the presence of price exhaustion is, one, you will start seeing presence of multiple candle wicks. Okay, you start seeing presence of multiple candle wicks occurring more frequently. Okay, like you can see over here, initially the wicks of the candles were short, but as it approached the resistance zone where price is about to change, you can see that the candles became wicky, like a lot of wicks. The wicks became longer. Those wicks, they are showing signs of rejection. Okay, these wicks, they show signs of rejection. And another thing you will see is decrease in volume. Okay, there will be decrease in volume if you are using the volume indicator. So there will be decrease in volume. And another thing you are to see is price will fail to make new highs or new lows. Okay, if it's a bullish trend and it's been making higher highs and higher lows, okay, it's been making higher highs and higher lows. Let me illustrate. Okay, higher highs and higher lows. Okay, higher highs, okay, and higher lows. It will fail to make new highs. Okay, it will fail to make new higher highs. Okay, so this will tell you that this price is about to change. I want to illustrate that. In a plain background. Okay, so if price is previously on a bullish trend and it makes higher highs and higher lows, higher highs and higher lows. Okay, higher high, higher low. Okay, higher high and higher low. So when it approaches a resistance zone here, instead of it to make a new higher high, it comes and either be equal with this previous high or it makes a lower high. Can you see that? So instead of it to continue the trend like this, it comes here to either be equal with this or makes what? A lower high over here. So it makes a lower high like this, and this tells you that the price is about to change, and from here it can go down. You understand? It can come down, it can crash down like this. Can you see that? And there's been a break of structure over here. So this is what I'm trying to explain to you, and then it continues the trend to be what? To be a downtrend like that. Can you see that? Okay, so this is what I'm trying to explain to you, that the price will fail to make what? New highs in the case of an uptrend, or fail to make a new low in the case of a downtrend trying to change into an uptrend. Okay, so let's proceed. So the second factor you have to look out for is to mark out key support and resistance zones. Mark out key support and resistance zones, because price tends to reverse at these zones. Okay, reversal often occurs at significant levels. So you have to mark out strong daily or 4 hours support in resistance zones. If price approaches these areas with a slowing momentum, a reversal is likely to occur. So what do I mean by that? So you have to mark out, like now I took this trade on the daily time frame. So I had to go to the weekly time frame and I marked out what key support and resistance zone. If you look at the position at which I took the trade, can you see that? If you look at this position over here, you can see that price reversed many times. Can you see that? At this very level. So I marked out this resistance zones and support zones. So multiple times price have tested this zone and it's reversed. So I had to mark it out, and when price got to that stage, you can see here now on the weekly time frame, when price got to that key resistance zone, you can see that it reversed. So this is one of the factors you also have to look out for you to be able to spot reversals before they occur. So mark out key resistance zone on a daily time frame or a 4-hour time frame, depending on where you want to take the trade. Like now I took the trade on the daily time frame, but I had to mark out my support and resistance zones, major support and resistance zones at the weekly time frame. So that's the second thing you have to do for you to spot a reversal. Now, after marking out this support and resistance zone, you don't just conclude with that. At that zone, you have to look out for what? You have to combine it with what? Reversal candlestick patterns. And this takes us to the third factor for you to consider for you to be able to spot out reversal. And the third factor is what? You have to look for the presence of what? Reversal candlestick patterns. So what are reversal candlestick patterns? These are the patterns that the candles show at key zones like the support zones and the resistance zones. And some of the best candlesticks pattern that spot reversal include: one, the engulfing candlestick pattern. So the engulfing candlestick. The engulfing candlestick can be found at the support zones and the resistance zone, and this signals what? Reversal. So this is an example of the engulfing candlesticks. The candle will engulf the previous candle. Okay, you can see that now. It will engulf the previous candle that's occurred. Okay, for instance, price is going. Let me show you on the chart. Okay, let's use this as an example. Okay, now look at this. This is an engulfing candlestick. The candlestick will be bigger than the previous candlestick. You can see that it's completely engulfed the previous candlestick. It's covered the previous candlestick. So these are usually found at the support zones or the resistance zones, and they signal to you that a reversal is about to occur. So you have to combine this with marking out your reversal and what the support zones. And another reversal candlestick pattern that you can look out for are the pin bars. Okay, the pin bars, you can either call them pin bars or you call them hammer or inverted hammer. Okay, they usually occur at what's mostly at the support zones. Okay, so this is the picture of the pin bar. You can see that. So I'm going to show you live charts, the pin bar, to see where it's occurred and if actually reversal took place. Now, this is an inverted hammer. Can you see that? It's an inverted hammer. So it occurred at what, at the support zone, and thereafter the price changed and started what, trending up. Can you see that? So let me get the hammer. Okay, so this is an example of a hammer here. Over here you can see that at the support zone it appeared. Over here again it appeared and the price was went high. Okay, the trend changed. So the hammer, the pin bars, the inverted hammer, or the hammer itself is usually found at the support zone, and they signal a change from a bearish trend to a bullish trend. So look out for it on your chart so you'll be able to identify them. So the next reversal candlestick pattern that we are going to talk about, that you should consider for you to be able to spot reversal, is the evening star and the morning star. Okay, the evening star and the morning star. This is an example of an evening star. An evening star is usually found at the resistance level, at the resistance. So take note, do not mix them up, do not get confused with both of them. Evening bearish, morning bullish. So the evening star appears at a resistance zone and it signals that price is about to change from being bullish to being bearish. And you can see that it is a combination of three candlesticks. As you can see, it's a combination of three candlesticks: a previous bullish candlestick, a doji, and then a bearish what, candlestick. So these three candlesticks together forms the evening star. So the evening star is usually found at the resistance level at the top part of your chart, and you have to check your chart, backtest it, and search for this pattern, and you'll find it. Okay, why the morning star is usually found at the support zone, okay, the down part of your chart. So when these occur, they signal reversal. Okay, they signal reversal. Over here I can see a morning star over here. So you can see a morning star over here, and this is indicating that the price is retracing a bit. Okay, you can see that a combination of a bearish candle. Okay, then the doji can be any color. It can be green, it can be red. Okay, then you have your bullish candle. So these three candle setup, they are example of a morning star, and they signal reversal. Okay, they signal reversal at the support level. So that is that for the reversal candlestick. So the next factor to consider to be able to spot reversal before they occur is the trend line break. Okay, the trend line break, you have to draw your trend line, and when the price breaks the trend line, you know that the price is likely to reverse. Okay, then you have to wait for a stronger confirmation. You have to wait for price to retest that zone. Okay, so if we are to identify reversal over here, all you have to do is connect your troughs. Connect your troughs, okay, for an uptrend, while for a downtrend you connect your peaks. So when you connect your peaks or you connect your troughs, when price breaks below that trend line, you know that the price is about to change. And that is exactly what happened here. You can see that the price broke through the trend line with a high momentum candlestick. Okay, if the trend line is broken with a short body candlestick, that reversal is likely not going to hold. It's likely not going to take place. But if it breaks with a high momentum candlestick like the one we have here, a large body candlesticks, then you should know that the price is definitely going to reverse. Okay, so that's another way to spot reversal before it occurs. Okay, so now that you have spotted out potential reversals, you don't have to jump in blindly. Okay, wait for confirmation. Confirmation is key. I repeat again, confirmation is key. So how do you wait for confirmation? After marking out your resistance or support level, check for presence of reversal candlesticks. Okay, check for break of trend line. Okay, use these factors to confirm before jumping into the trade. Now I want to give you a bonus tip. of a very strong factor that most pro traders use to spot reversal before it occurs, and this is the liquidity sweep. The liquidity sweep. Have you noticed a situation where price goes makes these moves like this? Okay, it makes moves like this. It's currently trending up. Okay, and then when it gets here, it's kind of um failed to make new highs. It kind of fails to make new high, like there's gonna be a consolidation here, and then it goes then and then come up. Can you see that? It comes breaking up, and then the price spikes up. Okay, it spikes up, and when it gets up, a lot of breakout traders that use the breakout system, they might think that price has breakout from the zone, and they are going to come over here and they're going to place the entry. Okay, they're going to place the entry, place the stop loss over there, and before you know it price is going to come it's going to come crashing down. Okay, so breakout trader comes over here, and so they place the entry over here with their stop loss here, and the next thing you're going to see is that price comes crashing down. Okay, price comes crashing down so hard, and it's going to take out those breakout traders. Okay, so the next thing you're going to see is the price is going to come crashing down back into the zone. Price is going to come crashing down here. It's going to do something like this. You might think it's coming to retest. Okay, it goes and then crash down. This is what we call liquidity grab. Okay, this very act here is what we call liquidity grab. Okay, so most traders might think it was a breakout and they jump in, they want to buy, and price come crashing down and they lose. So liquidity grab is designed to trap breakout traders, and it's going to fuel reversal after stopping out, hitting all their stop losses. Is going to come crashing down big time. So liquidity is one good way to spot reversal. Okay, so this is exactly how you spot reversal before they occur. Okay, so let me recap. For you to spot reversal before they occur, firstly, you watch out for what price exhaustion. Okay, watch out for price exhaustion, that the momentum of the candlesticks are becoming low. Okay, then next is to look out for appearance of multiple wicks. So look out for appearance of multiple wicks, and after that, you look out for appearance of reversal candlesticks patterns, okay, on your key levels like your resistance and support zone. And with that, you can spot reversal before it occurs. If you got value from the video, I'll hit the subscribe button and turn on your notification bell so that you'll be notified when we post many more amazing. Like, come here next time. Trade smart and stay profitable.